Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, April 25th, 2023. It's now the 24th. We start off in the S&P 500 daily chart in DeMark looking back to end of 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 3 count. And to negate that for end of day on the 25th, there must be a close above 4154.52 for the price flip to the sell setup count 1. The only levels in danger of becoming qualified are to the downside. This ongoing demand line, which for the 25th is at 4145.81, would require an open underneath that level and then a close underneath that level, 4145.81, and that would become qualified. Keep going and get under the trend factor disqualified down 1, and that gets qualified 2. The conversion line has been great support, 3 breaches to the downside in a row. But at the end of the day, it popped back up above it and is now above it and still acting as pretty good support. Price in the aftermarkets for the S&P 500 at 7:28 p.m. on the 24th is 41.33. So if that price holds till tomorrow morning, the 25th, on the open, price will open below that demand line again at 4145.81. It would need a close underneath it, and that certainly would be the telltale sign that things are headed for the downside, as then price would need to get back up above the conversion line, which for tomorrow starts the day off at 4128.21, right where it ended on the 24th, and a tick lower than this low on the 21st at 4113.86 will print the D wave up wave 2, and the 61.8 Fibonacci retracement to the downside for that D wave up wave 2 is approximately 3970, and the 50% retracement for the D wave up wave 2 is right around 4000. So ideally you want to see the retracement down to the 61.8 level to validate the D wave up wave 2. Just because it prints up here doesn't really mean much. It needs to travel down to its projection. If it doesn't and prints and just starts heading up again, gets past this 1, then the Fibonacci retracement for when the D wave up wave 3 prints on a tick higher than this high on the 18th would require the 61.8 Fibonacci retracement to print the D wave up wave 4. And when the D wave up wave 2 prints, that means it's on the D wave up wave 3, and that's the best wave to be on. But if they're shallow like this, where the 2 is, real close to where the 1 printed, that means the 3 would be shallow too, more than likely. In other words, not too much of an advance to the upside, no skyrocketing. The NASDAQ 100 NDXHILO chart shows the failure here the other day on the 20th, where the 5 EMA in blue went under the red 10 EMA, but the ROC 12 was like at 7 something negative. And then today on the 21st, it promptly turned around, spent 1 day underneath the red, and promptly turned around and went above the red again. So the blue 5 EMA went above the red 10 EMA, and that happened at negative 6.50, so that's not my buy signal. And all this probably reflects the fact that starting tomorrow, the big tech is going to start reporting earnings. So there's a lot of up and down in the big techs here for a couple of days at least. And the short-term KST went back above its signal line. You can see over here 25.52 negative for the KST, negative 60 for the signal line, so it's trying to get back above zero. Intermediate term is headed down, and the long-term KST had a tick up, so between the intermediate term and the long term, that's going to keep price in check. Maybe short-term upside, but not too much. And the NASDAQ Composite NAHILO chart shows some strange activity here. The 5 EMA in blue and the red 10 EMA here are headed straight up, but yet the price index of the NASDAQ 100 and the index itself headed down pretty sharply, so that's some strange behavior there. Yes, this is lagging indicator here for sure, but I don't think I've seen that drastic before like that. You can see that the high-low index and dotted went up. The ROC 12 went up too. And it looks like the red 10 EMA is above the gold 21 EMA, so we got the rainbow pattern going on here, blue, red, gold. And the short-term KST is trying to pull back on the stick and get up there for another barrel roll right at zero line there. Intermediate term KST is just headed straight up and to the right, and the long-term KST is headed straight down and to the lower right. So if the short-term KST can pull a hook around to the upside again, along with the intermediate term, then there might be a halfway decent move in the NASDAQ Composite. And the New York high-low, NYHILO, looks the same as the NASDAQ Composite. The blue is above the red is above the gold. More pronounced here than in the NASDAQ Composite, but nonetheless has that nice rainbow pattern going on here. And the ROC 12 is well above zero at 25.45. KSTs look the same as the NASDAQ Composite. Short term is trying to pull back on the stick right around zero. Intermediate term headed up and to the right. Long term KST headed down and to the right. The CBOE total put call ratios KST continues going downward. It's below zero, headed for the negative 150 line as measured by the scale on the left over here. Price keeps going up in a jagged formation, but nonetheless KST keeps going down, which is a good thing. We'll aim for this valley over here, could be representative of what's going to happen here. That's about 100 negative here, so let's see what happens around there. The S&P 500 support and resistance levels big board chart shows the gray areas around the daily conversion line and S1. Price in the pre-market hours for the S&P 500 at 6:23 a.m. on the 25th is 41.21. So the closest point to the downside is S2. Break down through that, we're back into the 4000 zone. 21 EMA, and the weekly diamond bottom extension, perfect uptrend channel bottom line. And to the upside is the ongoing demand line, the daily ongoing supply line, daily 50% exhaustion up, R2, R1, and the pivot point. And the 20 simple moving average was the first of the bunch of moving averages to make it up into the 4100 zone, so I gave that a red down support. Rack 1 still right at 0. ATR2 is venturing down further into its green zone, and the PPO extreme is still above 3% above 0. And the New York traditional McClellan breath oscillator to get back to 0 would require 64 advancers over decliners to get back to 0. Have a great day.